Getting back to the discussion on the market, Wayne, what's your outlook for the stock market? Will we see the sell-off that starts in April and goes through the summer months that we've seen over the past 3 years?
We don't think so. We think that equities are fairly valued right now, and given the economic data that's coming out, economic growth will be sustained, barring any kind of event risk coming out of Europe. We feel that earnings will continue to perform, although earnings growth will be challenged, we believe. And so, you're probably not going to see a huge run-up, but we don't see anything in the next 3 quarters that could sort of derail the stock market.
Jim, as a technical strategist, when you look at the vital signs of the market, what are they telling you now, and how does that tie in with your outlook for the economy, which you expect to weaken in the second half of the year, while it seems the consensus on Wall Street is for the economy to actually pick up in the second half of the year? Are we setting ourselves up for a big fall in the market?
The technicals are actually in pretty good shape, Jennifer. A couple weeks ago, 713 stocks made new highs. Last week, 622. The advanced decline line also made new highs. So from a technical standpoint, the market is in a very healthy place, which is why my expectation of disappointment is months out, because the technicals are usually a sign of what's to come down the road, and the strength of the recent rally has been pretty impressive. So although I think we're near a short-term high, technically the pattern from last November, you can see 5 waves up on the S&P 500. Sentiment has become a little bit more bullish. We have a number of strategists, racing the target, which is typically what happens near the end of a pretty good up move. So I think the high-yield bond market is not keeping pace with the stock market, which has historically also been a warning sign. So I think we're near a high. I'm looking for a pullback. Then I think we're going to get another rally. And if the subsequent rally is really strong, then that would push back, I think, the economic slowing that I would expect. So
when would you expect the first pullback to occur, Jim?
Very soon. I'm not looking for much in the short term, Jennifer, just because the momentum is there. Bullishness, buy the dip mentality is kind of ruling. So I think the next couple of weeks could be choppy. At most, I think 5% down towards 1,500 would be my guess.
Sam, what's your outlook for the market? Do you think we'll see a summer sell-off?
Well, historically, there is that old saying of sell in May and go away. The market has risen an average of 7% from November through April since World War II, but only about 1% from May through October. I would tend to say that what investors are most looking for usually does not happen. So maybe we end up seeing a very slight digestion of recent gains, but possibly not the steep sell-off that we saw in 2011 and in 2010.
Yeah, and I also have in my notes, you, Sam, increased your target on the stock market for the next 12 months, right? You're expecting 1670, and that's up from 1550. That's a big jump. Why did you move your target upwards?
I think it was a combination of both inertia and realizing that the market probably won't be providing us with that better or more attractive entry point as a result of a decline in prices. But basically, we could still justify where we think we'll be 12 months from now based on earnings growth and based on PE multiples. And even at the multiples that we're projecting, we're still going to be trading at a fairly hefty discount to the median over the past quarter century.